Hi everyone. Today I want to talk a little bit about unemployment and some potential risks there. Then we'll talk a little bit about trade tensions and consumer confidence, and of course we'll get into all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's start off with unemployment. I think this is probably the biggest concern for markets. We saw a huge spike down when unemployment went higher than expectations. So far that has calmed down a little bit, but we have been seeing the initial jobless claims spike up this last Thursday to 242,000, up from that 221 level. We've been chopping sideways here for a bit. You can see this indicator, but the year-over-year change starting to get relatively high here, not what you would want to see in a stable jobs market. They say Q4 GDP is still strong there at a 2.3. Consumer spending has been propped up by declining savings, but really this unemployment number is more important for me. I think it could be an early indicator in significant weakness. We did get the core PCE numbers. That was in line with expectations at a 2.7, still a little bit high, but in line with expectations versus the CPI and PPI data, which were both a little bit hot. And those inflation spikes definitely send a little bit of fear into employers and the US consumer. And if we start to see that unemployment trend continue a little bit higher, like we did on this last initial claims, that could be a problem. You do have to factor in the amount of government jobs that have been cut. That could be starting to play a role, but definitely not great either way. The other thing that markets care a lot about right now is trade tensions and tariffs. We've been talking about it as it comes. There are some tariffs potentially on the table here to start out the week on 4 March. That's going to be interesting to see if those officially go into effect here for Mexico and Canada. But consumer confidence did move down quite a bit here for February. It'll be interesting to see if that continues to go. Is that tied into the unemployment data that we just talked about? Is it tied into the potential trade war that's starting on 4 March? Definitely another factor that's potentially pointing to some uncertainty at least. Of course, uncertainty usually brings lower prices, and this is really what I've been highlighting. Heightened anxieties around trade and fiscal policies. It just doesn't feel like there's a coherent plan right now. There's a lot of things happening, and the president is moving very, very quickly, but it just doesn't feel cohesive. I want to seek some kind of end state. What are we trying to do? Be honest with the American people, and then we can get a little bit more certainty into markets. But like I said, it just feels a little bit disjointed right now, which is starting to put investors on some shaky ground, and the stock market trends are starting to decline. We've been watching it over the past week, and you should expect heightened volatility and fluctuating markets for the foreseeable future. It's just not an environment where markets can go higher substantially. I think the high is in, and I think we're probably going to see cheaper prices over the next couple months. Looking at fear and greed, we finished the week at a 20. We started the week at a 36, so we were already pretty low, and we did go lower. You can see nearly every major metric is already in extreme fear. Momentum in extreme fear. Strength also in extreme fear. Breadth not quite, but it is trending lower. Put call ratio spiking all the way into the 8s. Extreme fear. Volatility has stayed neutral. It is below the 20 mark. I would argue that's at least fear, but based on the metric, it's not. And then looking at safe haven demand, this has been cratering. Bonds have been massively outperforming while stocks have been tanking. And junk bonds, still in fear. The spread between investment and junk bonds continues to stay relatively wide at over 1.5%. Moving over to the sentiment survey, this is probably the lowest on the bull side that we have seen in a long time. I don't even remember it getting this low during COVID. Huge lows at 19.4, way lower than historical averages. And the bears, 60.6%. That is your 1-year high. Super high metric there, even the neutral getting squeezed to a 20. So makes a little bit of sense why we saw such a strong bounce on the Friday. Is this going to immediately flip? It's hard to say, right? Because I think the general sentiment is that we are going to go lower, but in the short term, this is a contrarian metric. Are we going to get a little bit of a bounce up, allow this to even out a little bit before we get the next leg down? I think that's certainly a possibility. Moving over to seasonality, we got a new seasonal calendar here. You can see post-election years relatively bullish here into the mid-March time period. Are we going to get that little bit of a bounce? But during the non-post-election years, your normal years, it is a continuation bearish here to mid-March. So it'll be interesting to see which one of these we get. Are we going to get the continuation lower? So far, we did have the bounce Friday, so I could see this maybe following through for a couple of weeks. Makes sense to me. But keep in mind that regular year potential bearishness, quite bearish, over 1% here through mid-March. Then moving over to the seasonal calendar here, you can see up 17 of the last 25 for Monday. We'll see if that matters. Bearish for the Tuesday, interesting. So bullish, bearish to start out. March historically starts strong here early in the month based on what it says. But then the next week we flip to bearish, bullish for the Monday, Tuesday. And then we'll see if this follows through. For that second week, it says up 13, down 8. Not a great metric there. Up 14, down 7 for the March averages. But once we get into that second half, it does seem to smooth out a little bit of bullishness here as we head into that quad witching. In terms of the calendar, we got beige book, factory orders here for midweek, wholesale trade, unemployment rate, so it's a jobs week. Not a ton of data actually, besides that jobs data. Moving over to the earnings calendar, honestly, I want to stop talking about this, but there are a few out there left. You got CrowdStrike, AutoZone, Target. Want to see how Target's doing. Best Buy is in there as well. Marvel. On the tech side, that could be interesting. Brown-Forman if you're a whiskey lover. But really the big ones for the week are going to be Broadcom. Want to see how they're doing. They've been suffering in the markets here recently as semiconductors sold off last week. And then you got Costco, a company that I do like and do own a little bit of. Obviously a huge company. Want to see them continue to do well, and I expect that they will. And then looking at the economic calendar, you can see that ISM data here for the Monday, Atlanta Fed for Q1. Want to see that do a little bit better. Minus 1.5 is terrible. Nothing really for the Tuesday, Wednesday factory orders, more ISM data. Not expecting much out of that. We do have an ECB interest rate decision for the Thursday. If they cut, maybe that helps us out a little bit. I don't really think it's going to do anything, but if the other banks continue to cut, usually we do cut eventually, even with that hot data. Hopefully that single data point doesn't become a trend by any means. We did see PCE this last week, which was in line with expectations, so that's a little bit better. Also want to mention initial jobless claims here. 236 is the expectation. 242 was the previous. Want to see that come down a little bit. That was a little bit higher than expectations last week. And then, of course, all of the unemployment data here for Friday, non-farms. Unemployment rate sitting at 4%. I have a feeling this is probably going to step back up a little bit. We've had soft unemployment over the last couple reads on this, but we've had a ton of cuts in the government from Doge. We'll see if that matters. And then you got Fed Powell speaking in the afternoon. We'll see if that matters as well. Hopefully he mentions something about the inline PCE data. Might give markets a little bit of excitement to the upside. Moving over to Max Pain, it's pretty mixed here on the week. You can see slightly bearish Max Pains to start out the week, meaning that markets could go a little bit lower potentially, but then into the end of the week, it's actually slightly bullish here. I'm expecting markets to push up a little bit more based on this, so we'll see how it plays out. Right now, fairly neutral to slightly bullish to close out the week. Moving over to the charts, looking at the S&Ps here on the monthly chart, you can see down 1.42% for the month. We had a down month for December, had a slightly up month, closed right at the high of the previous candle. Now you got an inside candle, continuing to show hesitation here. That's 4 months in a row in the same kind of price range. Again, to me, still looks relatively bearish. Looking at that weekly chart here, you can see we pulled back to the trend, touched the trend and bounced. Makes sense that we touched that level and found a little bit of support. Still negative on the week, still expecting at least one more down candle to close out the week. But for the Monday, it would make sense to see a little bit more rally. On the close, we did have a really strong finish for the Friday, so expecting a little bit of bounce there. Overall for the week, though, I still think we're going to see something more like this, where we get a little bit more follow through here. Momentum bearish, RSI bearish, huge volume on the selling. Everything says this should be going a little bit lower to me. And then looking at that daily chart, again, you can see sell, sell, sell pretty much all week. From the Thursday 2 weeks ago all the way here to the Thursday this week. And then you can see that Friday up candle, 1.5%. Is this a zone where we're going to see just a little bit more bullishness? The momentum did step to bullish. I could absolutely see it where this goes at least a little bit higher. And then just to give some context to those levels here, you can see 591 was the important level. Got back above it on the Friday. I think we could swing back up to this trend in here around 601.60. This is kind of the range I was looking for. When we had this kind of consolidation here, I thought we'd kind of swing up into this zone and then reject. We ended up going back to the trend first, finding support, and now I think we're going to go to that same region, highly traded zone, before we get that next leg down, which I do think is going to come eventually, but in the short term, I just think we were too extended looking for a little bit of a bounce. Moving over to the Tasty charts here for the monthly, you can see just how extended we were going into that November candle. So far, pullback in time. Are we going to continue to reject? We're back below that highest ATR band now. That's sitting at 607.02. We finally pulled back below it. We're still well above that 8 EMA. That's at 576.70. I think that could be where we're going here over the next month. I would expect a touch of that level. You haven't touched it in a while. You can see back here in the August-September timeframe, we got some touches and then got the rally continuations, but so far, this has been a massive run since November, all the way to current, over a year of rallies with very, very little pullbacks. So short term, 576.70 over the next month makes sense to me. And then looking at that weekly chart, your ATR trailing stop is right there at 565.09. So a little bit lower than that level that we just talked about on the monthly. And then you got your 34 EMA sitting right at that, basically the same level, 577.77, 577.80. So expecting a touch of that 9 EMA. You can see volume coming through on that selling, exactly the opposite of what you would want to see if we're going to get a follow through to the upside off of this kind of sideways consolidation we've been seeing. And then looking at it on the daily chart, you can see we are in bearish conditions. It's been a while since we've been in bearish conditions. Back here at the end of January, we spent all of February in bullish conditions right up until the 25th. And now we're in bearish conditions. This is why I think we might see a little bit of a rally. Your trailing stop right now is 613.50. If we get up into this zone, that's right above the highs and then get this kind of continuation. Did find a little bit of support in that 144 EMA zone. Did see strong volume on the Friday, which again to me says might see a little bit of continuation off of that Friday candle, but ultimately expecting this to roll to a lower low. Moving over to the NASDAQ here for the monthly, you can see 2.76% to the downside. Momentum continues to fade. RSI just barely below the SMA. That is not a great sign. We've had this really nice rally. We've been above that SMA since back here. Broke above it in February of 23, held above it March of 23, continued here all the way up until February of 25, and now we are starting to see that break down a little bit. Expecting some more lower lows to come. You can see trend support in here on the monthly around that 19,775 area. If we did get the fall to that level for the next month, that would be about another 5% lower. I think that's definitely within play. You can see some of these candles here, 5% in September of 23, had another 2% the following month. So we'll see. We'll see if it can follow through to the downside. We'll see. My expectation is that it will. And then looking at that week, you can see the down week, 3.38% here on that down week. That's even with the bounce that we saw on Friday. So not as strong of a bounce on the NASDAQ. Pretty terrible week overall. Momentum bearish, RSI bearish, huge volume. Everything says this should go to that next level in here. And then you got the 55 EMA on the weekly chart sitting at 19,697, just below the trend. So I think this is probably where we're going. Makes sense to me that we would head in that direction. We close below all the short-term EMAs and SMAs as well. But on that daily chart, you can see the 144 was where we found some support. This is why we're looking for a little bit of a retracement, maybe as high as 21,532. Just to give that some context here on the Qs, you can see that zone right here, 523, 524 in this zone. And then expecting that follow through back to those lower lows. And looking at that weekly chart here on the Qs, just to give you a price there, that 55 EMA is all the way down at 478.71. Is that all going to happen in 1 week? Probably not. That would be about another 5.5% lower, but I could see it taking place over the next 2 to 3 weeks. Something like this, where you get another stacked down candle, huge move down to the trend, and then we'll see if we get that kind of continuation higher, or at least a short-term bounce. Either way, though, structurally for me, this is broken and I'm expecting some lower lows. Moving over to the Tasty charts here for the monthly Qs, you can see it was down, obviously. The 9 EMA was sitting at 494.73, and the low of that candle was 496.93, so we missed that 9 EMA just by a little bit. Expecting the touch here in March for sure. Is it going to push down as low as that 21? I think that remains to be seen. We've seen it before where it does something like this, right? Where you get a consolidation, push close to the 9. The next month is usually not great, and then the follow-on month hits that 21 EMA. So if that happens, there's going to be a lot of downside potential over the next couple months. I'm not saying it's going to be exactly like this move, but it does look eerily similar compared to what we saw here at the end of 21 into 22 before we saw that bottoming here in December, January of 22 into 23, and then we saw the rally out of it. So we'll see. Wasn't great here. Got a really strong push off of it. Are we starting to see that topping pattern? Everything points to yes, in my opinion. And then looking at the weekly chart here, again, your support right now is that 34 EMA at 499.09. Are we going to get a little bit of a rally into the Monday? I think that's still true. You saw some volume here. Most of that was not good volume during the week. And you can see what I mean here. So big down candles all the way to that lowest ATR band, tons and tons of volume, but we did see a volume spike on that bullish Friday. Is it going to push up to here around 516, maybe as high as 520, 521? I think it's absolutely possible. We retest this zone in here, and then we get the follow through to the downside. So I am bullish. You can see I did buy shares on that Friday. I'm expecting short-term rally, 1 to 2 days, maybe 3 days into this zone here, and then I'm expecting it to sell off to lower lows. Moving over to the Russell here for the monthly, down 5.22%. Absolutely abysmal here for the February candle. Previous month was up 2.5%. We gave all of that back and then some, obviously. Pretty mixed results here on the Russell early in the year. December was terrible, 8.65% down there. And then for January, slight bullish, but gave all that back. Looking for trend support around here in that 211.60 area. We'll see if that holds. We got very, very close to it this week, but momentum bearish, RSI bearish. At this point, I would be looking for a push closer to that 21 EMA. That would take us about 4 1/3% lower, maybe as low as that 55, down another 7% possibly. Let's go ahead and extend out this trend line. I think that's definitely within play here, pretty much in line with that 55 EMA. Over the next couple months, can it happen all in one? Certainly. The Russell can move a lot. You can see it here. 6 1/4, almost 7% there down to these lowest trend lines. Could absolutely do all of that in 1 month, but wouldn't shock me if it took 2 months. Either way, I still think this is going to go lower. Pretty solid, maybe left shoulder head, right shoulder potentially, depending on how you're looking at it. Structurally, still bullish, but looking for this trend, waiting to see what happens there. And then looking at the weekly chart, looks much, much worse. Looks a lot more like that left shoulder head, right shoulder formation here. 21 EMA retest on the weekly, big sells to that 55, to the trend. Touch the trend here on the weekly. Momentum bearish, RSI bearish, 200 SMA sitting down at $200.20. So we'll see if it does push to that lowest level. That gives you about 6.6% to that 200. Definitely looks quite bad here. Then looking at it on the daily chart, just to give you some levels to work with, you can see that nice bullish candle Friday trend touch there. The level right now is 214.79. Can it push above there and push maybe as high as 221.50? Would make sense to me. The next level is 218.13, but wouldn't shock me to see this kind of rally through. The Russell can be quite volatile. Momentum step to bullish. RSI was oversold, which again is why I'm looking for a little bit of a bounce here Monday, Tuesday, maybe as much as Wednesday, depending on how aggressive it is. Then I would expect a lower high and continuation lower. Moving over to the monthly chart here for the Russell on the Tasty charts here, you can see we're still in bullish conditions. The trailing stop is all the way down at 171.35 for the monthly chart. That's a lot of downside. I wouldn't be holding that low, but it is technically bullish conditions. We'll see if this zone in here holds around the 203.50 area. That's probably where we're headed based off of this chart. Looking at the weekly, still bullish conditions here as well at 206.40 with the trailing stop there. Got the 89 EMA sitting at 208.80 as your next zone of support based on this. If you do get that continuation sell off, that would take you potentially as low as 198.05. Momentum bearish. Did see a spike in volume on that selling candle, so not great there either. And then looking at that daily chart, obviously bearish conditions. We were bearish conditions all the way from back here December with that big sell candle on the 18th. Never really recovered. Tested that kind of consolidation low from the day prior on the 17th. Couldn't get above it. Consolidated there for a while until the big sell there on the 21st. And then we've been riding that lowest ATR band to the downside, which right now is at 212.33. We'll see if it continues lower next week. Again, you can see just how extended it was below that lowest ATR band. Looking for a push at least to the 9. That's around the 217.29 level. Above that, your zone would be 221. 64, and then I would expect it to sell continuation lower to that next ATR band once we get a slight retracement. Moving over to the Dow here on the monthly, you can see 1.43% to the downside. We had this consolidation of trends in this zone, momentum still stepping to bearish. RSI below the SMA there as well at a 66.13, with the SMA at a 66.69, so technically just barely below it. The Dow's been on a massive run. You can see it through here. Still expecting it to break down from there. Looking at it on the weekly chart, you can see we did have a slightly positive week, one of the only ones that was positive for the week coming off of that 21 EMA. So the Dow hanging in there a little bit better. Momentum still bearish. RSI still bearish. Coming off of that trend, the 21 there is 434.26. So that was your support. Threw a wick slightly below it, but ended up bouncing into the Friday. And then looking at those individual levels here on the daily chart, you can see we came into that 432.78 area, consolidated there for 4 days. Looked like we were going to break it there on the Thursday, and we did go slightly lower, but then we ended up bouncing really powerfully on the Friday, looking for that 441.43 area as your next resistance. Moving over to the equal weights managed to stay positive here for the week, 0.2%. You can see we were as low as 177.51 and we finished at 180.18. So the equal weights doing a little bit better. The volume is still very bearish, but we touched the low from that 3 February week. Didn't quite hit my level, 177.25. I thought we might get into that zone, but we didn't. Maybe the level needs to be up here around the 177.75 area, but either way, we're in this same consolidation. Still looks like a high, lower high setup, and I would expect this to eventually roll over with everything else. But again, remember, short term, looking for a little bit of rally. Your next level to the upside would be 182.22. Moving over to the ratios, the SPY Russell was positive. The NASDAQ SPY very, very negative. Absolutely not what you wanted to see there. So overall, the SPY continues to be the best place to be. Even though it was down on the week, it was the best of the big three. Look at this huge down candle on the SPY NASDAQ. On the NASDAQ SPY, broke the trend, broke the level, looking for 343 as your next zone. Momentum bearish, RSI bearish, but again, short term, hoping for a little bit of a retracement, maybe retest 355 and then get that continuation lower. But the point here is that tech is absolutely not leading us higher, at least in the short term. Moving over to the SPY divided by the M2 money supply, pushed to the 27.25 level, wicked that level, found a little bit of a bounce. Expecting it to go through there. Your 55 is at 26.33, and then once we start to go through those levels, I do expect to go back to that 25.91 level at some point. And realistically, I think 22.05 is potentially in play. If we do see this continue to roll to the downside, that would take you back to that 144 in the 200 zone. If we did get a move like that, that's about 20% lower. Can it happen? Absolutely. Will it take a while to happen? Probably also yes. Moving over to Apple and Microsoft here on the weekly charts. Absolutely not great, really, for both of them, but much worse for Microsoft. Apple was down 1.5%, but it ended up holding 241.83 as your level. During the week, it was way, way lower, and it recovered a lot on that Friday candle, got as low as 230. So within the week, it was down closer to like 7 or 8%. Ended up recouping some of that, buyers coming in that zone. Can it hold now? Kind of looks like it could, right? Because you got the big up candle, full retracement, caught the bounce from there. Does it hold this level and push back to the trend? I think that's in play. That would take you back to 253.08 potentially. But if it breaks structure, then you'd be looking back for that 230.28 level, in my opinion. And then looking at Microsoft, this looks absolutely like distribution here, consolidation, wick high, consolidation, lower high, bigger breakdown, getting very, very close to breaking structure here at these lows. Touch the key level at 394. We've been looking for that for months at this point. It finally went, and now we're looking for this to continue lower. If you extend out this trend line here, that would take you potentially into the 374.50 area, my level 372.08, somewhere in there over the next couple weeks. Is it going to go straight down? No. Could it? Absolutely. We saw a month and a half, almost a straight up down move back here in July up until August, but that was coming off of a peak. We're already a little bit extended. We've been downtrending really since mid-December, with just a couple of spikes in and around the January timeframe. Either way, for me, Microsoft looks quite bearish. Moving over to Tesla and NVIDIA. Tesla was down 13.25%. Absolutely terrible. Broke all the structures here. This is 6 weeks in a row, basically, of bearish price action. Realistically, this could be going as low as 246.90. That's your 200 SMA in there. My level 255.44. This is the zone where you would expect to find some support. At this point, it's probably going to go there. There is some key levels of support on the daily charts, but the weekly looks even worse. Can we still get the higher low off of this? Certainly possible, but for now, I would stay away from Tesla. And then looking at NVIDIA, found support at that 55 EMA and bounced right back to the next level at 124.69. Currently, that support level is 117.39, so caught a really nice bounce. Can it hold that level and continue? Certainly a possibility, but for now, I would be patient because this continues to look weaker. You got the low, looking for that lower low, potentially down to the trend in here around 111, 112. Momentum bearish, RSI bearish, huge volume selling after NVIDIA earnings. So realistically, this is probably going back to the 106.64 level, back here to the price action we saw in mid-September. Moving over to Amazon and Alphabet, you can see both of these had terrible weeks, 1.99 and 5.15% down for Alphabet. Microsoft announced some quantum stuff, and that took the air out of this kind of bubble here for Alphabet, took us right back to the trend. Caught a bounce from the trend. Your current support is going to be 168.98. I have a level there, 170.95. We did close above it. 55 EMA is also in that same region, 171.56. Can it hold this zone? It really needs to, because if that zone breaks, there is not a ton of support until we get back into the 150.26 level, or potentially as low as that 200, all the way down at 136.52. So needs to hold here, otherwise this could be quite catastrophic for Google. Microsoft still holding the 212.25 level on a closing basis, managed to hold that just barely on the Friday. If this breaks, 255, 55 EMA is right there at 194. If that happens, you're looking for about another 8% potential downside there on Amazon. So pretty much everything is right at those key levels of risk where we could see major sell-offs, and we already saw a pretty strong sell-off just to get to these levels. Moving over to Meta and Broadcom. Meta was down 2.25 after basically a month straight of bullishness. We had a big down week, 7.2 and then 2.25 coming off of that VWAP level there at 649.57. That's your current support. Momentum bearish, RSI bearish, 21 EMA as low as 618.37 could potentially be in play over the next week to 2 weeks. And then looking at Broadcom, Broadcom has earnings. Last time they had really strong reaction to the upside off of earnings, but we've retraced a lot of that. Is it going to pull back down to 184.81, your next support level here, and then bounce off of earnings? That would be interesting, but right now, bearish momentum, bearish RSI, bearish volume, everything looks like this is going to continue a little bit lower, even after being down 8.79% this week. Moving over to Staples and discretionary. Staples continues to be a straight rocket ship. We've been going straight up since mid-January. Bunch of stacked candles, pushed to that 83.43 level on the weekly. Waiting to see if we can get to the next one there. 84.53, that's the high back here from September of last year. I think it's absolutely within play at this point. And then looking at discretionary's big sells there over the last 2 weeks, 3.79 and then 1.11%. Found support at the trend. Trend support right now for this week is going to be around 213 area. If that zone holds, then we'll be in good shape. If that zone breaks, I think realistically we're headed back to that 144 EMA zone, down at the 196.86 area over the next couple weeks. That's your next zone of volume. You can see basically no volume here off that giant up candle from November of last year. And structurally, it makes sense that this is going to go into that area. Will it do it in one sweep? Maybe, maybe not. We already have the high, lower high, low, lower, low. Is it going to show one more bounce, continuation lower into that zone? Certainly a possibility. Moving over to strong sectors this week, real estate continues to be amazing, breaking out back above the 42.84 level. This is getting expensive now. You can see 44.76 is your next resistance. Really, I was liking it back here, right? We were in this 33 to kind of 38 range, and then we started to break above that back in July of last year, but Now it's a little bit expensive. Can you still make money here? Probably. Is this going to go back to 45? Probably. Absolutely wouldn't be buying it in that zone. Real estate's been doing really well. It's been on a run. Is it a little bit expensive? Still yes. And then looking at financials, breaking out above all of these on a closing basis. Not a new all-time high, but new all-time high close there. Momentum still bearish. RSI is right at the SMA. Financials seem to be sussing out a potentially better environment for them with the new administration. So financials on a run, 2.82%. Probably going to break out to price discovery this week, in my opinion. Moving over to Breadth. Breadth actually managed to hang in there on the Friday session. Caught a bounce right back to the level of 51.75 for 20-day. Right at that midpoint. Can it get above it? Maybe. Bouncing off the RSI. Still looks okay. 50-day, same thesis really. We're in the zone of consolidation. Above the 50 line just barely. It's not strong breadth, but it's not broken breadth either. We're in the same zone. It looked super weak on the Thursday, obviously, but held in there for the Friday, giving us a pretty decent weekly close. So structurally not broken yet on market breadth for the weekly charts. Moving over to 200-day breadth here for the weekly chart. We did get a little bit of a down candle there, 2% down, but realistically we're in the same trading range we've been in. We got here mid-December, we're still in the same range between that 54 and 58.90 area. We did dip below it briefly in January, pushed back into it quickly the next week. So it is still kind of not great breadth, but still not breaking down either. So mid breadth for the 200-day. Moving over to yields, we haven't talked about these in a little bit, but they had a terrible week. 5% down, well below the 4 range. I kind of called this. I said we were probably headed back to that 375 area for the 2-year. I just didn't think it would be quite this dramatic. We broke that 4 level. We're headed back into that 375 area. Between the 3.66 and kind of the 3.9 area, I think we're going to be in here pretty soon. And then looking at the 10-year, big sell there as well, back below that 4.3 area. This is realistically where this should settle. I don't think this is going to go too much lower here. Between the 4 to 4 1/3 area makes sense to me. Momentum is still bearish though. RSI is still bearish. Want to see this kind of stall here. If this continues to sell super aggressive, that could be indicating there is something broken underneath the hood that investors don't quite know about and the bond market is signaling here. Big down candles like this they make me a little bit nervous, especially when there's not a whole lot of backing to it. Moving over to the dollar here for the weekly chart, up on the dollar, bounced off that 21 EMA, tested it the previous week, tested the same low, and then bounced back above 106, looking for the 108 area. This kind of looks like a bull flag. It's a really steep bull flag, but either way, I think this could swing back into this zone here, around the 109.50 area. Momentum still bearish, but short term, I think you're going to see a little bit more acceleration on the dollar. If the dollar accelerates to the upside, that's probably not so great for equities. You can see we've had pretty weak conditions on the dollar, but now it's starting to re-accelerate to the upside after this monumental run it had here. Moving over to bonds. Bonds had a great week, 0.5% here for J&K. TLT, 3.15%, absolutely massive week. Pushing right to that 55 EMA on the weekly chart. That's at 92.50. The high of the week was 92.48, so we missed it by 2 cents, but momentum bullish, RSI bullish, huge volume there. Expecting this to continue higher into the 96.50 area. Definitely seems like a place to go once we break 92.82. Which I do think is going to happen. You also got J&K breaking above the 200 for the first time in seemingly forever. The last time we were above the 200 was back here in January of 22, before we had this massive sell-off. But now we're back above the 200, back above all the EMAs and SMAs. That's a pretty bullish sign in my opinion. 97.69 is the most recent high level, expecting it to go there. Basically everything looks really good here on bonds, which is part of the reason I am still super long on bonds right now. Moving over to the VIX for the weekly, it was positive even with the big up move on Friday. 7.68% on the week. 20 level was your resistance. I still think we're going to this trend up here. Is it going to happen immediately? Probably not, but that would take you into the 24.5, 25 range. That would also take you into this trend line. If we extend that out, that takes you right into that zone, right around the 25 area. So we'll see if it'll go. It's certainly in play. In my opinion, we're above this trend line. That was resistance the previous week, got above it this week, and I think we're headed into this next area. Again, wouldn't shock me to see this maybe retrace a little bit and then continue into that area. But either way, I still think we're going at least a little bit higher. Moving over to my accounts, I managed to make about $690 on the week, which you like to see, especially on a week where the NASDAQ was down so much. Over 3%, almost 3.5% down for the NASDAQ. So really, really good week for me, managed making money on down weeks. Doing okay on the year. The Russell has been terrible, just like we saw, but year to date, basically flat for my IRA, and making money on my individual account, which has been all Qs, which is also negative on the year. So far, so good. For the Monday, looking for a bounce, right? So we're looking for some rallies into the Monday, looking for the 212 put for $88. That's got about $50 left on it for the Russell, and then for the Qs, sold the 505 call. Bought the shares at 503.59. $4 credit on those, so my max profit is $509, which I'm totally fine with. That gives me at least another dollar to the upside of potential, plus this $400 left in here, so should give me about another $500 of potential profit on top of what I made on the Friday. So totally fine with that. I would love to hold that into the Monday, Tuesday, if it can hold up really well. Depending on how it's looking, I might even roll this out to the Wednesday. But either way, looking for a little bit of a rally into the early part of the week, but watching for those hesitations, as I do think the market will ultimately fall to lower lows. Let me know down in the comments section what you think of the unemployment rate potentially ticking up this week, and then let me know about the tariffs. How do you think that is going to impact markets this week? Are they going to go into effect as scheduled on the 4th? Or is it another bluff? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.